Okay, g'day everyone. Welcome back to another episode of Wilson Weekly. We've got Doc joining us again today. How's everything, Doc? Happy New Year.
Yeah, good, Brenton. Yeah, happy New Year to you too, and all our viewers, listeners, etc. It's we were just discussing off air. Then it promises to be a pretty interesting market in the property market this year. Won't get too ahead of ourselves in terms of dialogue, but gee whiz, we just might get an interest rate cut this year sometime, maybe sooner rather than later. But that will depend on the data. But I think the Reserve Bank's definitely changed its stance in terms of when it expected to cut rates. But of course, we've got some important data coming through this week. We've got the latest unemployment data. Reserve Bank will be looking closely at that. And the end of next week, we've got the latest quarterly inflation data, and that will be a key to what the Reserve Bank decides to do. But we're going to look at the latest monthly inflation data, which gives us a good forward indicator as to that quarterly data set. But the Reserve Bank certainly seems to have changed its narrative. It's now saying, well, as long as it's happy that inflation's moving in the right direction, then, it may consider cutting rates. And that will be good news for the housing market. A number of our capital city markets have just sort of peaked out at the moment. Not surprising, because prices have risen another good year last year for house prices in just about all our capital city markets, a couple of exceptions. But it's just the sort of the refueling that housing markets need when they do get to those affordability peaks, which happen in the cycle, just to get up and running again. So maybe an interesting year for rates, and that'll mean a positive year if they do fall for the property market and higher prices going forward, which it's good news for homeowners, not so good news for first home buyers. But last year was a good year for first home buyers in a relative sense. So there's still plenty of encouragement or plenty of motivation to get into the housing market. So, but I'm rattling on a little bit here. It is the beginning of the year, so please excuse me. Maybe I'm a little bit rusty after a few weeks of sun, surf, and sand. But I am down in Melbourne at the moment, enjoying some nice weather here. So let's have a look at this week in property, which is our first real week for the year. Of course, My Housing Market is my brand. Our brand, I work in conjunction with the good folks at Infinity, of course, where Brenton is from. And we try to provide the latest news, or we do provide the latest news on a weekly basis in the property market, just to guide you in your decision making in what is always an important part of life, property purchases and property sales. But we do look at not just the top level property data in terms of prices and rents, but also all those factors which drive the property market. And of course, we've already alluded to that today with discussions about interest rates. So it's all about the current state and future prospects of housing markets. We're into 2025 now. This is, I think, an episode 110 of our weekly podcasts. So we keep on keeping on, which is good news. And it is all about providing everybody out there with the latest information on the property market. So to, reinforce the credibility of your tool sets in terms of that decision making. So enough from me. Let's get moving. It is the week ending January 15th. We're already 2 weeks into the new year, up and running, and a lot of people are back at work, and that'll, of course, accelerate over coming weeks. This week we're going to look back a little bit, which I think is important, to the latest December house and unit prices, and that'll show us how 2024 performed versus the previous year, and some very solid results really across the board in relation to what happened last year. We'll also look at the latest monthly inflation data. That is the November monthly inflation data, but of course we had that reported to us in December. And the latest house building costs. We normally report on auction market activity, which is a very good forward indicator, leading indicator of what happens in housing markets, and it proved again to be such last year. But of course, we don't have any auction activity to report, at least for the next couple of weeks, because the auction market is on holidays along with a lot of others. So we'll let that one slide for the next few weekends until we do get our auction data being released on that weekly basis. In terms of the number of properties, it can give us a good data set for what's happening broadly in the housing market. So let's have a look at home prices. And of course, this is the big data set for us all. We can now look at what happened in 2025. It was another solid year for home prices. Again, an increase in the national capital city home price for both units and houses over the calendar year 2024. Most capitals continue to report positive annual growth and mostly similar to the levels reported over the previous year. Of course, there were exceptions to that, and we will look at the top performers when we see the breakdown of the data. But national home prices are set, in my opinion, to record another positive year of growth over 2025. We've already alluded to the prospect perhaps of lower interest rates, which will act to refuel capacity in the housing market, and that will work its way into higher prices, again higher this year overall compared to 2024. And the big three, particularly the big two, I think, this year will be Perth and Brisbane. Adelaide already showing some signs of a little bit of buyer fatigue. Been really strong growth in Adelaide over the last couple of years. It maybe have just sort of reached that ceiling of affordability. And I'm not sure we're going to see the same results in Adelaide this year, not even close. But as I said, lower interest rates will certainly help to keep that market ticking over. But we're not seeing any sign of a slowdown in Perth and Brisbane for 2025 going forward. So other markets will be a little different. I think that the Sydney market will be steady rather than growth being as strong as last year. But I do think that that's a product of affordability. And the Melbourne market has continued to sort of drag the chain compared to the other major capitals. And I think the Melbourne market, more than any other of the major capital city markets, will really be looking forward to a cut in interest rates just to give it that bit more of a kick along in confidence, which I think is what's been lacking clearly in the Melbourne market over the last couple of years. Even though, Melbourne is certainly more affordable than it has been compared to Perth, Brisbane, Adelaide, and also Sydney. And its economy is still providing, some reasonable results. So I just think it's a confidence factor there. I think lower interest rates will help to kick that Melbourne market along in 2025 when and if they come. So let's have a look at the national result. National house prices were marginally higher over December compared to November. Of course, this is the December quarter data, so it's the 3 months of median house prices recorded over December compared to the 3 months reported over the month ending November. You can see they're certainly considerably higher than where we were over December 2023. But we have seen 23 out of the past 24 months of growth in the national weighted average capital city market. Of course, there is no such thing as a national house, but what we do, this measure is a weighted average. So what we do is we weight the medians of each of the major capitals, and of course the weightings do favour, because they're based on activity, they do favour activity in the bigger markets, Sydney, Melbourne and Brisbane. So basically this is a conglomerate, the national house price is a conglomerate of Sydney, Melbourne and Brisbane particularly. So marginally higher over the December quarter compared to the November quarter, the national weighted average capital city market. So we can see they're just up by 0.1% over the quarter, the national result. Let's look at the breakdowns there. Sydney and Melbourne were flat over the December quarter. Brisbane market down, Adelaide market down. These are just marginal adjustments, 0.1% down over the quarter. The Perth market continues to rise, up 0.8%. Hobart market has looked a little better over the year, although it did tend to have some up and down results from month to month, but up 0.6% over the December quarter. Darwin and Canberra down over the quarter, however. Anyway, the important thing is to look at the yearly results. And of course, this year is, when we're talking about last year, this year to December is the same as the full annual result. That's why the numbers are the same. So the yearly result for Sydney house prices were up by 5.7% over the year, over 2024 compared to 2023, which was similar to the result the previous year. Melbourne house prices were generally flat, down by just 0.9%. But the big movers were Brisbane, up 13.5% over the year. What a great result there for Brisbane homeowners. Also, Adelaide similarly up 13.6%. But Perth was really the best performer, the strong performer over the year, with median house prices increasing by a remarkable 22.7% over the year. So good news there for Perth property owners. And when we look at the 2-yearly results, that reinforces just the breakaway of those big three performers, Brisbane, Adelaide and Perth. Brisbane house prices up 27% over the past 2 years, 22, 23, 24. Adelaide up 26.2%, so very similar results there, Adelaide and Brisbane. But Perth, median house prices up 41.9% over 2 years. That is an incredible result. Now, we know that the Perth housing market really was an underperformer through the post-mining boom period following the end of that mining boom in 2011, 2012. Really, the Perth market went nowhere for the best part of a decade, but it's certainly picking up now, or has picked up over the last couple of years, as we can see there. It hasn't really regained where it was at its peak, but I think there's plenty of confidence in that Perth housing market, and no sign, as we saw from the monthly data, of it slowing down, even though the other major capitals did show some easing, which in terms of seasonal effects is not a big surprise coming over December, but no slowing down in Perth. So some really strong results there in house prices. We can use that as a forward indicator of what's to occur in 2025. As I said, Perth continuing to rise. Maybe some affordability issues appearing in that Adelaide market, similarly in Brisbane. But I think the prospects for prices growth, particularly with lower interest rates, are positive there, as they are for the other markets, as we've discussed. So some pretty impressive results there, which sort of go against the doomsayers, as they do every year. And I think some of them are doing it again this year. Maybe not as many, because we're seeing those predictions of lower interest rates. Not as many are predicting a crash in house prices this year, which we tend to get in January every year, no matter what happens. And it's still, even though it proves to be nonsense year in, year out, it doesn't stop that the media picking that one up. But let's have a look at unit prices. Unit prices were similarly flat over the December quarter versus the previous November quarter. In fact, they were just down marginally, just as house prices were up marginally nationally. Unit prices were just down marginally. So let's have a look at the results. It was very close to zero. The national house price was steady over the month, just down by a fraction, but not enough to bring it to that, to round it down to 0.1%. So national unit prices steady over the month. Sydney and Melbourne down 0.2% in Sydney. Melbourne down also 0.2%. But strong growth there, or certainly solid growth in Brisbane, up 0.3%. Adelaide up 0.5%. And Perth up again remarkably by 2.3% unit prices in Perth. Now, Perth and Adelaide are smaller unit markets, so they tend to be a bit more volatile going forward. But when we look at the annual results, it's just the same old when we break down the capital city performers. Sydney up 4% for unit prices over the year, so annual growth in Sydney unit prices 4%. Melbourne down 1%. So again, those two are similar to what we saw with houses. Certainly not as good as houses at the margin, units in Sydney and Melbourne. But again, big results here from Brisbane, Adelaide and Perth. Brisbane up 25.5% over the past year. Perth up 25.2%, Adelaide up 15%. Now, we can't be calling Brisbane a small unit market, because it's not. It's a significant unit market, that Brisbane unit market. And as we say, when we look at these unit prices in Brisbane every time, it's not that long ago that the so-called experts were telling us that Brisbane unit market was saturated, that prices would continue to fall, that there was a terrible oversupply. Well, gee whiz, they're still rubbing the egg off their face, I think, those that made those predictions, because the demand just is so far ahead of supply in Brisbane unit markets, and that's why we're continuing to see strong prices growth there. And over the past 2 years, Brisbane unit prices, hang on to your hats, has increased by 40.4%. So if you had ignored all that doom and gloom and nonsense that was coming out of the self-appointed experts regarding the oversupply of units in the Brisbane market, you would have done very well as a purchaser, up by 40.4% and still rising. Adelaide up 36.3% and Perth up 39% over that 2-year period. So some very similar results there. I'm expecting, again, the same sort of activity in these capital city markets for unit prices in 2025. Again, reinforced by the prospect, perhaps, of an interest rate cut earlier sooner rather than later. So a bit of the same old there. And going forward, we'll see whether that can improve for 2025. The big picture is we're still seeing a very low level of new apartments being approved for building in the capital city markets. So supply is still well below demand in that for those particular types of homes. If you want to get a copy of the latest My Housing Market house price report, house and unit price report, that's the December report, which gives you those annual results. There is a QR code which you can scan on your phone, and that will take you, give you a link to a PDF copy of that latest report. So that's our housing market data, how it finished off 2024. Similar results to 2023, which was a revival year for the market. So let's see what happens in 2025 going forward. And as I said, I don't think, even though I think that prices will be likely a little bit lower, prices growth, not prices themselves, but the growth of prices will be a little bit lower overall. We await to see the impact of lower interest rates if they come, which will certainly help to refuel housing markets going forward and certainly add to buyer confidence, which is pretty high everywhere, except perhaps that Melbourne market at the moment. So the latest inflation results for November. Now, these are the monthly inflation figures. The Reserve Bank has said that, and they're very important. This is why we look at these figures, because it will give us guidance on what will happen in terms of interest rates, because the Reserve Bank does control what happens with interest rates, and it has told us quite clearly that it's focusing on, obviously, inflation, which is what its brief is, as well as the labour market. Unemployment is also an important factor in what the Reserve Bank uses to decide what's going to happen with interest rates. But the November monthly data came out just recently. We're going to see the quarterly data coming out in the next couple of weeks. The Reserve Bank has said that it focuses on the quarterly data, not the monthly data. So it is waiting for that quarterly data set, but certainly the monthly set gives us a good forward indication of what's likely to happen with the quarterly stuff. So what we saw was that we actually saw an increase in the headline inflation rate. Now, the headline inflation rate covers all the particular items in the basket of goods that the ABS measures to determine what we're spending on to give us what overall prices growth is in the economy. So annual headline inflation, so that's all the items, actually increased from 2.1%, which is quite low, of course, to 2.3%. So up a little bit. But the important measure to focus on is not the headline rate, it's the underlying rate. So what the Reserve Bank does is it looks at the inflation rate that is adjusted to take away the sort of the volatile items, such as fuel, such as food, which can change due to seasonal effects. So it doesn't want to include those volatile items. It wants to look at sort of what's happening in the underlying measure. So it has a statistical measure called the trimmed mean, which trims the average for the items that are volatile, and they're typically fuel and food. So it's its preferred measure. So the preferred measure for the Reserve Bank underlying inflation actually fell to 3.2% from 3.5%. So that's the good news story in terms of interest rates out of the November monthly data. And when that data was released, we also, as we reported here, we also saw the Reserve Bank sort of change its narrative in terms of what its plans were for interest rates. Until recently, it had been saying that it had to see underlying inflation sustainably within the target band, and that's 2 to 3%. That's sustainable, and that's the quarterly measure before it moved on interest rates. Now it's saying that it will. It's not looking for it to actually be sustainably within that midpoint range. That is, say, 2.5%. It's now saying it's happy to see it moving towards that level. So it is moving towards that level. It's fallen from 3.5 to 3.2%. So that is actually now matching the narrative of the Reserve Bank, and said that it was happy to think about cutting interest rates if the underlying inflation rate was moving towards the target range, and that's 2.5%, 2 to 3%. So, of course, a lot of analysts took that up as long as we did, as seeing a significant change in the mindset of the Reserve Bank, and of course have started to predict a cut in interest rates. In fact, most of the major banks have now changed their stance and are saying that they expect an interest rate cut in February. Not sure about that, but we do have two factors that will, I think, reinforce that, whether we get a February cut, and that is firstly the quarterly inflation data, and I think that will show, similar to the monthly data, that we've seen a falling away of underlying inflation, which will match what we've been saying has been the target for the Reserve Bank, that is moving towards the target. And also we have the latest labour market data, which will come out this week, which is for December. So if we saw a weakening in the labour market, I think that would be a no-brainer in terms of the green light for an interest rate cut. But if we see a strengthening in what is already a very strong labour market, remembering back, the latest unemployment rate is just 3.9% and falling. I think if we had another strong result like that, it might act to have the Reserve Bank wait until maybe the May meeting, which will then be able to focus on the March quarter inflation data. So a little bit wordy there, but we've got some interesting data which we're going to look at next week in terms of the decision making for interest rates from the Reserve Bank, which of course is very important if you're engaged in the housing market, just where interest rates are going, particularly given that we're looking for a bit of a kick along after a year where higher prices have certainly impacted affordability, and that would mean a refueling of the market, as we've discussed previously, with lower rates. So the headline inflation rate actually rose, not talking about the underlying rate, and the reason it rose was that we saw that the electricity subsidy that the government has given out to households last year, which was that $300 handout for electricity bills, its impact was lower over November compared to what we saw in October. So it was the fall was 21.5% over the year to November, compared to 35.6%. So that meant that the annual headline inflation was up a little bit because the relief from electricity prices wasn't as strong as the previous month, and also fuel prices, the relief from fuel prices wasn't as strong in November compared to the previous month, at 10.2% relief compared to 11.5% relief the previous month. So that's the reason why headline inflation moved up a bit, but we're ignoring that a little bit because the main game here is to look at what's happening with underlying inflation. So you can see there that inflation rate, this is the underlying inflation rate. You can see how, notwithstanding what happened the previous month, that we're seeing that downward trend in underlying inflation. Australia's underlying inflation is now very similar to the US at 3.3%. We know the US have cut interest rates by 1.5% recently. Their interest rates, however, were higher than ours and are still higher than ours at 4.76%. So this, of course, is the monthly data set. The Reserve Bank will be looking at the quarterly data set. And as I mentioned, that latest quarterly data set will be coming through in the next couple of weeks. So we'll certainly be examining that in depth because of its implication for interest rates. And as I've also said, we've had a pretty good guidance as to where it's likely to be, given we get that monthly data set, which we've looked at today. Now, one of the important factors in inflation is housing costs. Reserve Bank measures two factors for housing costs. It measures rents, and that's not just asking rents, it's overall rents. We have seen some relief, and we'll look at that next week when we look at the December rent report. We'll look at that next week, and rents have certainly eased. Rental growth has not been as strong as it has been. So that's impacted the housing costs factor in the inflation rate. But the other factor the ABS look at is house building costs, not unit building costs, but house building costs in terms of their measure of overall housing prices. So we saw what we've seen, which is a little disturbing. As we know, we've seen a significant breakout in house building costs over the past 2 years. That was a response to the previous government's home builder allowance, which produced a lot of grants for house building to eligible applicants. Of course, we had too much demand as a result of that, not enough supply. A shortage of building materials and labour meant that house building costs went through the roof, and that was one of the contributors to high inflation. It had been easing recently, but now we're starting to see house building costs rising again, and this is really disturbing. So the My Housing Market monthly quarterly house building index is now on the rise again. We shouldn't be too surprised at this because we have seen a surge in house building approvals. So certainly that's the part of the construction market, the dwelling construction market, that's pretty active at the moment. And I think that that's acting to create, on the supply side, at least the energy for higher prices. And we are starting to see that. So the index has certainly increased. But what, of course, the ABS look at and the Reserve Bank looks at is the annual change in house building costs. Now, it's picked up over the last 2 months, the annual change with the quarterly index, now up to 4.8%. So still lower than where it was a year ago at 7.1%, but heading in the wrong direction. So not good news there for those building a house or planning on building a house, that we're seeing house building costs on the rise again. And also not good news for inflation as that works its way into the inflation rate. So interesting changes there over recent months to house building costs. But as I said, we have seen a revival in house building. That's up and running again, reflecting likely increased demand. And of course, that means that perhaps demand again is moving ahead of supply, and that's acting to push up house building costs, which we're clearly seeing happening at the moment. So that's all for our data for this week, for our first week back for 2025. But as we usually do, we're going to give a plug to the My Housing Market Infinity Suburb Data Market Suburb Data app. What we do here every week is give you the big picture global insights into what affects housing markets overall, particularly capital city markets. That's what we discuss. But of course, we're all interested in what's happening at the local level. That is your suburb. So where's the information you can get to give you an insight in real time, so what's happening here and now, into local housing market activity on a suburb basis? Well, you can get that in the My Housing Market Suburb app, which our folks at Infinity control. So there's a link to the app, and there's a QR code to the app. But as I say every week, you need a password to get access to this fabulous little app, and you need to get that through the Infinity Group. But it's well worth having, because it does break down the market energy of every suburb in Australia, which has actual data. It is updated in real time, so you understand what's happening here and now in the market. So let's have a look at a screenshot of the app. There it is. So you can filter for prices or rents. We've filtered here for price. You can filter for the state outside capital city region or the capital city region. Here we've filtered for New South Wales capital city region of Sydney. We're looking at the suburb of Blacktown. We can filter it for houses, units or townhouses. We're filtered there for houses. And you can also filter for the number of beds. So we're looking at a 5-bedroom house in Blacktown. and currently it has a median house price, and these are asking prices. So these are what the vendors are asking and the agents are asking for properties at the moment. So you can get a really good clue. You don't have to wait for the sales data. And this is all the properties that are for sale at the moment. And that gives you a median price in Blacktown for a 5-bedroom of $980,000, a high of $1 million and a low of $970,000. And the number of properties for sale also, so you can see what sort of competition there is in that market, is 14. So that's for prices, and you can also do exactly the same thing for rents. And there's the data for Blacktown similarly with a median rent. So it's not just the median that we give you, it's the middle of the market. We also give you the top of the market and the bottom of the market. So the high rent there is $1,250, the low rent there is $900, but there's just 2 5-bedroom houses for rent currently in Blacktown when that screenshot was shown. Now we also have an add-on to the app for investors, and this for investors will show you what the returns are on each suburb. Again, you can filter it for units, houses, or townhouses. You can also filter it for the number of beds. And the results here shows you what the the current asking yield is. So that's measuring the current rent against the current asking price as a return over a year. So these are the annual yields. So you can see there, Ultimo is the top there for the Sydney region. The reason that yield is so high is because it does include a lot of student accommodation, which is hard to differentiate, but we'll work on that. But it gives you the more normal results from the other suburbs there, with Westmead, the top performer, with a yield of 6.71%. It also gives you the vacancy rate for those suburbs. So it tells you what sort of demand supply environment there is in terms of the rental market, and also the number of properties that are for sale and the number of properties that are for rent. So it's a great little adjunct to the app, particularly guided towards investors. So if you're making decisions in the property market as an owner-occupier or as an investor, this is all the data I guess you'll ever need to sort of modelling what's happening in the housing market. So get a hold of that app. Next week we're going to look, as I mentioned, at December home rents. How's that rental market going, which has shown signs of easing over recent months. Has that continued over December? We're also going to look at the very important December labour market data. That will be the last labour market data available before the Reserve Bank makes its February decision. If it's strong, that labour market data again, if we do have an unemployment rate with a 3 in front of it, then that might offset any initiatives based on changes to inflation. So very important, and we'll look as usual at the November building approval data. So that's all from me today. If you're looking for a copy of the slide deck that we've presented, there is a QR code which will give you a copy of that slide deck. Happy New Year again to everybody. I hope 2025 is another positive year for the housing market, as it was over all last year. It would be a surprise if it wasn't, because that's usually not the case, and usually requires higher interest rates, not lower interest rates, which I think they've got a very clear prospect of. So we'll catch you all next week for episode number 111 of the My Housing Market Infinity weekly podcast. Thank you, Brenton.
Yes, and it's good to be back.
Pleasure to be here, and it's good to be back. And I look forward to doing it all again next week. And we've really got some interesting data, and keep an eye on what's happening regarding interest rates, because that really has changed lately and significantly changed. And I guess if lower interest rates means higher prices, it's got to be a motivating factor for those that are thinking of getting into the market, if prices are going to be rising.
Yeah, it's going to be interesting to see that, mate. There's a huge impact on the market. We'll see what happens. Thanks again, mate.
Good on you, Brenton. Thanks, mate.